Hey guys, welcome back to the Independent Investor Channel. It's so good to be with you. On this channel, guys, I believe that anybody can invest. Anybody can do this, all right? A lot of the times when I talk to people and they're looking to get invested, you know, they always talk about having to become an expert in stocks. They happen to become, you know, an expert in reading balance sheets. And all that stuff with regard to general awareness can really help you. But anybody can invest, guys. And I believe that there's one strategic way of entering the market if you know nothing about the market and you want to get involved in investing, and that's the passive investing approach, guys. It'll get you that exposure to the market, but it doesn't require any type of trading, really. You just get involved into a diversified index fund or an ETF fund, and it basically gives you that instant exposure and takes you from a non-investor to an actual investor. Now, this was Stefan who hit me up from the Netherlands, and you guys have to understand, a lot of my audience, they're from all over the world, so a lot of folks are hitting me up from England, from the Netherlands, for example, and they say, look, I don't have a Roth IRA. What do I do? Okay. And to solve basically the problem or the non-existent of a retirement account for this particular individual who's looking to invest is to invest in a passive manner, all right? Because long-term strategy is going to win out over time for this particular individual. And he actually asked me to throw down and do a passive portfolio for you guys. Now, if you guys are new to the Independent Investor Channel, I roll a little bit different than the other channels, guys, all right? My information is really for your guys' benefit, not mine, okay? I'm doing this channel for you guys. I do this stuff every single day, and I will continue to do it, all right? I've had a lot of commentary thanking me for being genuine in nature and not doing this for my own benefit, because I don't. I do it for you guys. And that's a lot of the reason why when I hear comments, I always try to turn those comments back in the form of a video, because if I'm getting commentary on certain things that I'm not touching in some of my basic lessons, then I want to bring those questions to light and expand upon those more in depth to make sure that you guys understand what your options are entering into the market. If you are new to the channel, congratulations on finding the channel. It's relatively new. I just hit my 500 subscriber mark. I thank you if you're new to the channel. Again, I'm very aggressive on commentary. I have the time to do it now that the channel is relatively new. And I really like to respond in depth. I've got a lot of questions coming through. Stay tuned for my top 5 comments. If I hit you back and tell you that it's going to be a top 5 comment, then you're going to be one of the subject top 5 comments on my top 5 videos, all right? But this is going to be passive portfolio, guys, and this is for anybody out there who knows nothing about the market. Really, quite frankly, anybody out there that can benefit from understanding a more passive approach to the market. Now, I always say that you can enter into the market passively, okay, without the assistance of single stock allocation, but you can't do the reverse. What I mean by that is you can own a portfolio, an index fund of the S&P 500, and keep that within a self-managed Roth IRA account, because that's going to grow tax preserved and wealth preserved going forward for you guys. But I don't want to see you start a Roth account, a self-managed Roth IRA account, and just load it with single stock right away, okay? And that's what I mean by doing it in the right order, all right? So when I'm talking about a passive portfolio, for you guys that are in the US and are in Canada, I believe the Canadians don't have a Roth IRA. They have something similar, but they do have self-managed accounts, all right? So the type of account is something that you really want to hit first and make sure that you get the proper account started first, okay? A lot of people want to start the Robinhood account. You're not going to get the tax protection that I like in that Robinhood account if you're going to go and start that. So start the self-managed Roth IRA account first to give yourself that tax protection and wealth preservation going forward, okay? By eliminating those fees in those accounts. For you guys that are watching, I've got some folks that are actually in their teenage years, prior to 18 years old. And I've actually had a few comments come through for my teenage viewing audience wanting to get started in the market. Absolutely. Absolutely. Do not wait until you're 18 years old. You want to start that compounding monster right away for yourself. And I've got some folks out there that are engaging with mom and dad or your parents out there to maybe think of some strategic ways of getting yourself entered into an account even earlier to start that compounding growth going forward. All right. So these two are really your tools. And hopefully you guys hear me out for my continental United States investors, the guys that have access to the Roth IRA, the self-managed Roth IRA. You're able to do the account. And if you're young enough, then you're going to have both of these things on your side. But you need to get both of them started and acknowledge the benefit to having this account in the U.S. because Stefan told me that in the Netherlands, they just don't have that particular account, all right? So it's an extreme benefit to you guys to hear me out because I'm bringing to you guys the very best account that I know of for you guys to get started in way of the very best retirement account out there, all right? So account and time. For a passive portfolio, guys, I'm focusing in on those individuals that have $0 invested up to $50,000. There's a reason why, okay? From 0 to 50,000, I want you guys to limit the entry and exit fees for yourself. Really, if you can eliminate them altogether, awesome, all right? If you get started in my brokerage house, which is Merrill Edge, which is a subsidiary of Bank of America, they will incentivize that account and give, I think it's 30 free trades, okay? Those 30 free trades can really help you enter into your passive positions initially so you can get those dollars growing up to this $50,000 mark. And the reason why I have 50,000 on here is because at 50,000, that's where the free trades kick in per month. And you start to get 30 free trades per month at this $50,000 level. At $100,000, you get 100 free trades, which I consider it unlimited, okay? But we're talking about a passive portfolio from 0 to 50,000, okay? And you're thinking, okay, 50,000, Ryan, that's impossible. I'll never get there. That's not true. You can contribute up to $5,500 to your Roth IRA account per year. If you had the $458 per month to contribute to that Roth IRA account, guys, in 10 years, you're going to be there. You're going to be at $55,000. You're going to be there and you're going to have that money tax protected. Now that's assuming over that 10-year cycle, you get 0 rate of return. And we all know that that's not true, okay? But I'm just talking about contributing to that level. After 10 years, let's say you're 18 years old and you're watching this. At 28 years old, you're sitting on over 50 grand. All right, or in excess of 50 grand based on the investments and the performance that you've got out of the assets that you placed into that account. That's exciting, guys, okay? So 0 to 50,000, I'm going to be doing the next segment on 50,000 to 100,000 or 50,000 and above because the strategy can change a little bit into where we can actually start to get into a little bit more passive portfolio with single stock allocation, okay? But getting you guys a nice foundation within your passive portfolio really is the primary goal for you guys and for my viewing audience, okay? So we've got the right account, we've got time on our side, we've got in between $0 and $50,000 to invest, okay, guys? 458 is how it breaks down max contribution level for the Roth IRA at $5,500 per year. If you only have $200 to invest, no problem. That's almost half of your realized benefit. All right. But we want to work up to that maximum contribution level as soon as we can to make sure that we're tax protecting as many dollars as we can going forward, okay? Now, how is it that we build this account out, all right? When Stefan hit me up with the question, he asked me, how is it that a viewing audience that knows nothing about the stock market can enter into a passive portfolio? And these are the two vehicles that we can put within the self-managed Roth IRA account and let them ride. You'll never have to touch them again. The only thing that you'll need to do is fund them. That's it. Fund them. Okay? That's it. Guys, so many people think that you have to have a financial planner to tell you how to fund your account, all right? It's not like your health care where you have to go to a doctor, or if you have a car that's broken down and you know nothing about being a mechanic, to take your car into the mechanic and have it fixed. Financial planning is not something that you need. You can do it on your own, and the passive portfolio allows you to do this. Don't make the mistake that a lot of people make, and you get excited, you want to invest, you start the Roth IRA account to get the tax protection, but then you put it into a managed account and you get those management fees chewing away at your retirement dollars going forward. Do not make that mistake, guys. I'm cutting right to the chase for you and letting you know exactly the account that you need to be in, and that's the self-managed or the self-directed Roth IRA account, guys. So once you get those started, you can start this passive portfolio and get those dollars accumulating, and you can get them compounding as quickly as you can in your investment life, okay? And as early as possible, all right? Now, the two products that I've got up here are both Vanguard products. I've looked at expense ratios across the industry. Charles Schwab is advertising that they have cheaper fees, indexing fees, and ETF fees than Vanguard. The problem is they're only in specific funds, guys, all right? So you really need to look at what they're trying to accomplish. They're trying to accomplish having the lowest cost in the industry. I still feel that Vanguard has the very best product out there for the low expense ratio that you'll pay, because you have such a nice diversified choice amongst the Vanguard products. Now, the first one is the exchange traded fund. VOO is the ticker symbol. If you knew nothing about the stock market whatsoever, I don't make stock recommendations out there with the assumption that you're going to take those recommendations and invest in them tomorrow, okay? There's a lot of YouTube channels out there that put their stock picks out there, and people are going out there and buying those things right away. No, that's not how we do it. I'll throw a red flag on that every single time. I encourage you guys to do your own research. With that said, I don't make recommendations that you can't go out there and just purchase tomorrow, okay? Now, if you're looking at a passive portfolio and you're looking at an exchange traded fund, to meet that passive portfolio goal, there is no better ETF out there, in my opinion, than the VOO, which is the Vanguard's S&P exchange traded fund, all right? This is going to pay you a cash dividend of 1.85%. It's going to be a cash payment quarterly divided by 1.85, of course, right? So the quarterly cash payment is going to go. The 1.85 is going to be paid to you annually in a cash dividend, all right? The expense ratio, guys, in this account is 0.04. That's as close to free as you can possibly get. It's an amazing fund, all right? So if you just went ahead and took whatever contribution to this account and put it into the exchange traded fund VOO from Vanguard, you'd be good to go with a year-over-year performance of 14.78% since inception. You could fund that account and be good with it going forward, all right? That is what a passive portfolio looks like. No need to put others with this. Just lump all your money into this exact category, into this ETF, because by buying this ETF, you're buying the entire S&P 500 within one fund, okay? And you're basically paying Vanguard for taking that fund and offering it on the open market under the ticker symbol of VOO, all right? Now, the final product that I'd like to mention is the index fund VFINX, all right? This is the Vanguard's index fund, okay? You've all heard of mutual funds. An index fund is a fund that tracks the S&P 500, this one specifically, all right? It is like a mutual fund, okay, without the expense ratio of a mutual fund, all right? I do not advocate for expense ratios or fees on the Independent Investor channel. Our goal is to do away with fees altogether or minimize them as much as we can, all right? The expense ratio within the VFINX is 0.14, which is extremely low, guys. I'm happy with putting you into the VFINX if this is the avenue you want to go and you don't want to go with the ETF. The index fund allows you to take the quarterly dividend and roll it back into the fund, which is really, really impactful on this particular fund going forward to realize the maximum compounding benefit within this fund. Now, some of the drawbacks within the VFINX, guys, I've done a video on ETF index fund comparison. I highly recommend that you go back and watch that video with all my other videos, guys, all right? But VFINX allows you to dividend reinvest, but the VFINX actually has a minimum to start the account, and there is a transaction fee of $20 to actually start this account. All right, so you have to have $2,500, which you can build up to in time, all right? But there's a minimum to start this account of $2,500. That's just what it is. I don't make the rules, Vanguard does, but it's a phenomenal fund. Gets you a year-over-year performance since inception of 10.96, okay? If we're making 8 to 11% interest on our money year-over-year, guys, we are winning the battle, all right? This is for Stefan. I hope you enjoyed the passive portfolio video. You guys need to leave your comments in the comments section down below. If you are new to the channel and you know nothing about investing whatsoever, do not hesitate to employ the passive portfolio techniques that I lay out there for you guys. All right, this is stuff that I do myself and I don't mind pushing out there for my viewing audience. If you're new to the channel, please consider subscribing to the channel. Hit the subscribe button for me so you are notified of any future videos that I put online. I do upload videos quite frequently to try to keep you guys engaged. I do not do daily uploads, okay? I think it really gets repetitive and quite frankly boring. And some of the YouTube channels that I've tried to follow that do daily uploads, guys, it actually turns me off. So I'm not gonna subject you guys to that. I want you to look forward to the Independent Investor channel videos. And I think it's probably more appropriate if we aim for a couple videos a week. That's what we're going to start out with. And that gives me time to really engage with my audience in the commentary. If you know somebody out there that's looking to get involved in the stock market and they know nothing about the stock market, I encourage you to share this link with friends, family out there. If you enjoyed the video, please hit the thumbs up button to support the channel, guys. Thank you so much for tuning in to the Passive Portfolio on the Independent Investor channel. Good luck in your investment future.